Now, in another matter, Mr. President, the Dodd-Frank law became effective in 2010. It ostensibly targeted banks too big to fail. But 7.5 years later, Dodd-Frank has proved to be far too blunt an instrument. For one thing, it's imposed a crushing regulatory burden on small community banks and credit unions. Rather than fixing too big to fail, Dodd-Frank has threatened to make many of these Main Street mainstays too small to succeed. This is especially problematic because of the central role that local financial institutions play in each of their communities. Local lenders provide a majority of small business loans and nearly 3/4 of agricultural loans. And in low-income communities, when a local bank closes, research suggests that loans to nearby small businesses plummet by 40%. Farmers, ranchers, small business, vulnerable communities, Americans need community banks and they need credit unions. But Dodd-Frank is making it harder for these institutions to survive. Millions of Americans from rural areas to inner cities now find themselves in what researchers call banking deserts. Fortunately, help is on the way. Thanks to the leadership of Senator Crapo, Democrats and Republicans have joined together to co-sponsor a modest but important bill that would streamline the obstacles tripping up these smaller institutions. It's a common sense compromise measure, and senators do not need to resolve all of our differences on Dodd-Frank in order to unite behind it. I look forward to voting to pass these reforms very soon.